Supplementary Major Medical Policies Insurance Exam Prep. Question 1. What is the primary purpose of a supplementary major medical policy? To replace a basic health plan. To provide coverage where a basic plan limits out or excludes. To provide life insurance benefits. To cover dental and vision only. Supplementary major medical is layered over a basic medical policy to pick up expenses when basic plan limits are exhausted. Question 2. How is a corridor deductible applied in a supplementary major medical plan? It must be paid before the basic plan pays anything. It bridges the gap between the basic plan benefits and the major medical coverage. It is deducted from the final payout. It is paid by the insurer. The insured pays the corridor deductible out of pocket after the basic plan is exhausted and before the supplementary plan begins paying. Question 3. Which plan pays first when an insured has both basic medical and supplementary major medical? The major medical plan pays first. They split the cost 50/50. The basic medical plan pays first. The insured chooses which pays first. The basic plan provides first dollar coverage. Once its limits are reached, the supplementary plan kicks in. Question 4. What feature prevents the insured from catastrophic financial ruin in a major medical policy? Corridor deductible. First dollar coverage. Stop loss, out-of-pocket maximum. Flat rate indemnity. The stop loss feature caps the insured's out-of-pocket costs for the year. Question 5. In a supplementary major medical plan, what usually follows the corridor deductible? First dollar coverage, co-insurance, a new basic plan, policy termination. Once the corridor deductible is paid, the supplementary plan typically pays on a co-insurance basis, example 80/20. Question 6. If a basic medical plan covers $5,000, the corridor deductible is $500, and the bill is $10,000, how much does the insured pay for the deductible? $0, $500, $5,000, $4,500. The basic plan pays $5,000. The insured pays the $500 corridor deductible. The remaining $4,500 is subject to major medical coinsurance. Question 7. Why do basic plans often require a supplementary policy? Because basic plans are illegal. Because basic plans have low dollar limits and no catastrophic protection. Because basic plans only cover prescription drugs. Because basic plans require a 50% copay. Basic hospital/medical/surgical plans have low caps, example, $10,000 max, leaving the insured vulnerable to major medical bills. Question 8. True or false? Supplementary major medical plans often have a very high maximum lifetime benefit, such as $1 million or more. True. False. They are designed for catastrophic losses and traditionally offered high lifetime maximums, though ACA removed lifetime limits on essential benefits. Question 9. What does integrated deductible mean in the context of major medical? The deductible is waived for accidents. The basic plan benefits are applied toward the major medical deductible. The insured must pay the deductible in installments. It applies only to mental health. An integrated deductible means whatever the basic plan paid goes toward satisfying the major medical deductible. Question 10. Which type of deductible requires the insured to pay a set amount entirely out of pocket between the basic and major medical plans? Integrated deductible, flat deductible, corridor deductible, family deductible. Unlike an integrated deductible, a corridor deductible must be paid entirely by the insured before the major medical kicks in. Question 11. A supplementary major medical policy typically covers room and board, surgery, and physician visits, only experimental treatments, only cosmetic surgery, only long-term care. It covers a broad range of services, including those covered by basic plans, once basic limits are exhausted. Question 12. If an insured does not have a basic plan, what type of major medical policy would they purchase? Supplementary major medical, comprehensive major medical, hospital indemnity, surgical expense. Comprehensive major medical stands alone and combines basic and major medical features into one policy with one deductible. Question 13. Coinsurance in a major medical plan typically requires the insured to pay 100% of the bill, 0% of the bill, a percentage, example 20%, of the expenses after the deductible, a flat dollar copay per visit. Coinsurance is cost sharing on a percentage basis, commonly 80% insurer/20% insured. Question 14. What happens when the stop-loss limit is reached? The policy cancels. The insurer pays 100% of covered expenses for the rest of the year. The deductible resets. The basic plan starts paying again. The stop-loss provision protects the insured. Once the limit is reached, coinsurance stops and the plan pays 100%. Question 15. Under a major medical policy, reasonable and customary (UANCI) charges mean the insurer pays whatever the doctor bills. The insurer pays based on the average fee charged by doctors in that geographic area. The doctor must accept Medicare rates. The insured must negotiate the fee. Major medical policies often limit reimbursement to the usual, customary, and reasonable (UCR) fee for that specific region. Question 16. True or false, most modern health insurance is sold as comprehensive major medical rather than basic plus supplementary. True. False. Due to complexity in ACA regulations, single comprehensive major medical plans have largely replaced the split basic/supplementary approach. Question 17. Which expense is not typically covered under a major medical plan? Blood and plasma, prescription drugs, workers' compensation claims, outpatient surgery. Occupational injuries covered by workers' compensation are excluded from major medical policies to prevent duplication of benefits. Question 18. What is the purpose of a maximum out-of-pocket limit? To cap the insurer's losses, to protect the insured from unlimited coinsurance expenses, to limit how many times the insured can visit the doctor, to increase premium revenue. It ensures the insured has a known maximum financial exposure in a given year. Question 19. In a supplementary policy with an integrated deductible of $2,000, if the basic plan pays $1,500, how much more does the insured need to pay to meet the deductible? $2,000, $1,500, $500, $0. The $1,500 paid by the basic plan applies to the $2,000 deductible, leaving the insured to pay the remaining $500. Question 20. Which feature is characteristic of basic medical plans compared to major medical? High deductibles, first dollar coverage, coinsurance, stop-loss limits. Basic plans typically provide first dollar coverage, no deductible, whereas major medical relies heavily on deductibles and coinsurance.